Morning, everybody. Nick Stern with Robert L. Stern Financial Services. I'm a certified financial planner here. Just want to thank you for tuning in. Really appreciate the time. So, for October's topic discussion, I wanted to give you a market update. And I think it's timely because the market has been somewhat scary, and for some, it might even be worrisome. And it's really a market environment that we have not experienced for a little while now, at least probably about 18 months or so, since we've seen this much volatility. So I want to answer the question for you today: what's going on? Where's the volatility coming from? Well, the positive thing is that most of the problems are coming from outside the United States, namely Europe or China. There's some geopolitical risks going on out there as well in the area. So the positive of that is it's not here, and we probably won't get directly affected, although we've seen some indirect impact from those problems. There are some offsetting strengths that I would definitely say are really positive for the economy and should over time be positive for the financial markets. Number one, in the United States, the jobs is at a 13-year high, the jobs rate. Layoffs and firing, it's a 7-year low. So those two statistics are really, really positive, and they really indicate that the economy is not only recovering, but the recovery is in fact strengthening. So what's going on with the financial markets? You're telling me that there's some good data out there and there's really positive indicators, but the financial markets, for whatever reason, are not showing that. And I think what happens is sometimes the financial markets can somewhat disconnect from what the real economy is showing. So recently you've seen some of that disconnect, and in this particular case, the disconnect was that the markets, the financial markets, have actually run up probably more than justified according to what the real economy, our economic indicators were showing. And the most recent volatility that you've seen in the past month or so, I would say that the market is coming back down to reality. And even though it's painful for some and it's painful short term, in the long run, these are the types of events, or this is the type of volatility that we actually almost need so that the market can continue higher. And the reason why it needs it is so that the financial markets investors can get back to the actual real hard data, the balance sheets of companies, and the fundamentals, so that when the financial markets in fact run up or improve or make a positive advancement, it's backed by real numbers and real facts, not just lofty expectations, for example. So, of course, there's no guarantee for the market to continue to go up, but it's our opinion that after we get through this initial short-term volatility, we feel that the market will, again, start to make positive advancements. Could the market continue to go down? Yes. Again, I had mentioned there's some risks outside the United States, and we don't feel that they're going to directly impact us, barring some sort of catastrophic event like Europe going back into a deep recession. We don't foresee that, but that's just an example of what could really cause the financial markets to continue to drop, and we might see in that scenario a more deep correction. So looking forward, we do see some near-term volatility. Hopefully most of the heavy volatility is over with, but again, we have yet to see. But long run, in the next 12 months, we see that the market is going to make an advancement, and that's our opinion, but again, there's no guarantee there. Regarding the stoppage of quantitative easing, historically the markets have performed just fine when quantitative easing has either been reduced or taken away. Also, historically, there's been a bit of that short-term volatility that we've been seeing, but once the markets, investors get over that, the market again seems to do just fine. So our outlook now going forward is cautious optimism. We're going to just keep on and continue to monitor the economy, and as long as good numbers and the economy recovery continues to strengthen, we see that's going to eventually bolster the financial markets. Remember, for your own personal well-being, particularly that if you're a younger investor, remember it's long term depending on your goal. So if you're saving for retirement now and your retirement's 40 years from now, while this short-term volatility is painful, try not to think about it, because most likely it's not going to impact you 40 years from now. Just a little takeaway advice for your own sanity. So there's a number, an email, and a website at the bottom of the screen. If you have any questions, we're always here to help. Please feel free to email any questions, give us a call, set up an appointment. There's no obligation. Really appreciate your time. Thanks again, and I will see you next month. Have a great fall.